What's going on, everyone? If you've been watching silver prices lately, you know something absolutely incredible is happening right now. Silver just hit an all-time high of over $64 per ounce in December, and we're now seeing prices surge past $85 in early 2026. That's more than double what it was just a year ago. And here's the thing. This rally isn't some random pump. The Federal Reserve just made a series of moves that have sent silver into what I'm calling the perfect storm. Today, I'm breaking down exactly what the Fed did, why silver is exploding, and what this means for you as a silver investor going forward. Let's dive in. So first, let's talk about what just happened with the Federal Reserve, because this is the catalyst that triggered everything. The rate cut cycle. In 2025, the Federal Reserve cut interest rates 3 consecutive times. They started in September, then again in October, and finally in December. Each cut was 25 basis points, bringing the federal funds rate down from over 5% to a range of 3.5% to 3.75%. Now here's what's really interesting. That December rate cut, it wasn't unanimous. In fact, we saw a historic 9-3 split vote, the first division like that since 2019. 3 officials dissented, showing deep disagreements within the Fed about monetary policy. Why this matters for silver. When the Fed cuts interest rates, it makes non-yielding assets like silver and gold more attractive to investors. Think about it. If you're getting less interest from your savings account or bonds, where else are you going to park your money? Precious metals become a lot more appealing. But it gets even better. Lower interest rates typically weaken the dollar, and since silver is priced in dollars globally, a weaker dollar makes silver cheaper for foreign buyers, which increases demand and pushes prices higher. The hidden move. Here's something most people missed. The Fed also quietly restarted what they're calling reserve management purchases. They're buying $40 billion in Treasury securities. Now, they won't call it quantitative easing or QE, but let's be real. When the Fed is expanding its balance sheet and pumping liquidity into the system, that's bullish for hard assets like silver. Now, the Fed's actions are just one part of this story. The other part is absolutely critical, and it's something that's been building for years. 5th consecutive year of deficit. According to the Silver Institute, 2025 marked the 5th straight year that silver has been in a supply deficit. What does that mean? It means global demand is exceeding supply by massive amounts. Let me give you the numbers. 2025 deficit, approximately 95 million ounces. Cumulative deficit from 2021-2025, almost 820 million ounces. That's nearly a billion ounces of silver that the market demanded but couldn't get from current production and recycling. That's insane. Why can't supply keep up? Here's the problem. About 70-75% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. So even when silver prices go up, mining companies can't just flip a switch and produce more silver. They're mining for other metals, and silver just comes along for the ride. Primary silver mines, the ones actually mining for silver specifically, only account for about 28% of global production, and starting new mines, that takes years because of permitting delays, capital requirements, and declining ore grades. Global mine production has been essentially flat, sitting around 813 million ounces annually, while demand keeps climbing. Where's all the silver going? This brings us to industrial demand, and this is where things get really interesting. Industrial applications now account for over 50% of all silver consumption. Let me break down the major sectors. 1. Solar panels. This is the big one. Each solar panel uses about 20 grams of silver for its conductive properties. Solar demand jumped from 60 million ounces in 2015 to 232 million ounces in 2024. That's nearly quadruple in less than a decade. 2. Electric vehicles. Each EV uses up to 2 ounces of silver in sensors, wiring, and power management systems. As EV adoption grows globally, this demand is only accelerating. 3. AI and data centers. Here's something new. AI infrastructure requires massive amounts of silver in high-efficiency electrical components and thermal management systems. This is a brand new demand driver that didn't even exist a few years ago. 4. Electronics and semiconductors. Silver has the highest electrical and thermal conductivity of any metal. There's no viable substitute for many of these applications. The critical point, Because industrial demand is largely inelastic, meaning it doesn't decrease even when prices rise, factories will keep buying silver at any price to keep their production lines running. This creates a price floor that keeps getting higher. So now we've got two massive forces colliding. 1. The Fed making silver more attractive as an investment. 2. Structural supply deficits that aren't going away, but there's more happening that's adding fuel to this fire. Investment demand. Surging exchange-traded fund holdings of silver increased by roughly 18% through November 2025, generating inflows of 187 million ounces. That's the highest level of investor buying since 2020. Why? Investors are worried about stagflation concerns, government debt sustainability, the Federal Reserve's future independence, geopolitical risks globally. Silver is being recognized for what it really is, both an industrial commodity and a monetary safe haven asset. China's export restrictions. In early 2026, China implemented export restrictions on silver. This is huge because China is one of the world's largest silver producers. These restrictions have created additional supply tightness and helped push prices above $85 per ounce recently. Physical market tightness. Here's what's happening on the ground. There's an unprecedented liquidity squeeze in the silver market. Lease rates hit record highs in 2025. What does that mean? It costs more than ever to borrow silver, indicating there's a scramble for physical metal. Exchange inventories are being drained. In London, growing demand from India combined with investment demand has created significant tightness. Physical metal has literally been trapped in the wrong locations because of tariff concerns. The gold-silver ratio. The gold-silver ratio dropped from over 107 in April 2025 to 78 by October, the lowest since mid-2024. This indicates institutional investors are gaining confidence in silver relative to gold. When this ratio falls, it typically means silver is outperforming, which is exactly what we're seeing. So the big question everyone wants to know, where is silver headed from here? Expert predictions. Metals Focus expects silver to reach $60 per ounce in 2026. We've already blown past that. Some analysts are now calling for silver to potentially hit $100 per ounce or higher. Bank of America sees continued strength due to central bank buying, deficits, and a weaker dollar 2026 outlook. The structural deficit is expected to continue, though it may narrow slightly to around 30-63 million ounces, depending on which forecast you follow. But make no mistake, we're still in deficit territory. The Silver Institute projects deficits will continue for the foreseeable future because 1. Mine supply remains constrained. 2. Industrial demand keeps growing 3-5% annually. 3. Investment demand is accelerating. 4. There's no quick fix to the supply problem. What about Fed policy going forward? Now, the Fed is expected to pause rate cuts at its January 2026 meeting. Most analysts predict maybe 1 or 2 more rate cuts during 2026, likely in the second half of the year. Does this mean the silver rally is over? Not necessarily. Here's why. Even if the Fed pauses, interest rates are still lower than they were, making silver attractive. The structural supply deficit continues regardless of what the Fed does. Industrial demand isn't going anywhere. The green energy transition and AI infrastructure build-out are multi-year trends. Potential risks. I want to be balanced here. What could slow silver down? If the Fed actually raises rates, unlikely but possible, a major global economic slowdown, reducing industrial demand, significant increases in mining production, takes years to happen. A major technological breakthrough that substitutes silver. No viable alternatives exist today. So what should you do with this information? The investment thesis. Silver right now has a unique dual nature. 1. It's a critical industrial commodity with inelastic demand. 2. It's a monetary asset and inflation hedge. This combination is extremely rare. Most commodities are one or the other, but not both. Key factors to watch. If you're investing in silver, here's what you need to monitor. 1. Federal Reserve policy. Watch for any hints about future rate decisions. More cuts. Watch more bullish for silver. 2. Industrial demand metrics. Pay attention to solar panel installations, EV sales, and semiconductor production. These drive long-term demand. 3. Supply news. Any announcements about new mines, export restrictions, or production changes matter. 4. Dollar strength. Silver and the dollar typically move in opposite directions. 5. Real interest rates. This is calculated as nominal rates minus inflation. When real rates are low or negative, silver typically performs well. Different ways to invest. You can gain silver exposure through physical silver, coins, bars, silver ETFs, silver mining stocks, higher risk, higher potential reward, silver futures, for experienced traders only. My take, the fundamentals for silver are stronger than I've seen in over a decade. The combination of Fed policy support, structural supply deficits, and accelerating industrial demand creates a compelling long-term case. However, and this is important, silver is volatile. We've already seen it double in price over the past year. Expect pullbacks, corrections, and wild price swings. This is normal for silver. If you're considering investing, think long-term. Dollar cost averaging might make sense rather than trying to time the perfect entry, and never invest more than you can afford to lose. Let me recap what we've covered today. The Federal Reserve triggered this silver rally by cutting rates 3 times in 2025, making precious metals more attractive and weakening the dollar. But the Fed's actions are just the catalyst. The real story is the 5th consecutive year of supply deficits totaling nearly 820 million ounces. Industrial demand is booming from solar, EVs, AI, and electronics, while mine supply can't keep up. Investment demand is surging as people seek protection from inflation and economic uncertainty. China's export restrictions added more fuel to the fire. The result? Silver hit all-time highs above $64 in December and has surged past $85 in early 2026. Experts see continued strength ahead, with some calling for 100+ silver. The bottom line, this isn't just a short-term pop. We're witnessing a fundamental repricing of silver based on structural supply-demand imbalances that won't resolve quickly. The green energy transition, AI infrastructure build-out, and electrification of transportation are multi-year trends that will keep driving industrial demand higher. Combined with Fed policy that's likely to remain supportive and ongoing supply constraints, the case for higher silver prices remains compelling. Call to action. That's it for today's video. If you found this breakdown helpful, make sure to smash that like button and subscribe to the channel for more silver market analysis. Drop a comment below. Are you buying silver at these levels or waiting for a pullback? I read every comment and love hearing your perspectives. And if you want to stay up to date on every major silver development, hit that notification bell so you don't miss future videos. Thanks for watching, and I'll see you in the next one. Stack on!